All right, let's get right into it here. Market is up about 0.12%. On the S&P Nasdaq up 0.4%. Along the semis, Russell 2000 biotech led the entire day today with a 1.4% positive. It's been a while we see biotech leading the market, and that's good to see because obviously small caps and biotech lagging extremely here last year or so. Apple, Google, Amazon, these guys are up. Nvidia's down. Tesla's up a little bit. Comparing, I mean, it's up 2% today, but obviously Tesla has been coming down quite heavily in the last pretty much this entire year, right? Netflix down, Bitcoin down. These crypto miners are also down. Gold up, silver up, treasury bond up. VIX is down about 1.3% there. Let's stay with S&P 500 ETF. Spider, 65-minute chart here. So this is where we closed yesterday. And what happened was yesterday I was talking about the fact that we have this triangle formation as the market was consolidating, tightening up, right? Looking for a breakout. You can see the market was tightening up all day in the last 2 days. This is the best way to break out and break down at the same time in first hour, right? We break out and then flush down. I mean, you're doing everything at once. So that's exactly what we saw here on the first hour. Can you imagine? I wasn't watching this morning, but can you imagine some of these micro traders freaking out if you're, placing your triggers to go long because they thought that this is a consolidation pattern. And you're up here, stops are getting taken out. And if anybody was long, they were forced to cover on a breakout, right? If they were long, they probably placed their short covering trigger somewhere up here. And I wasn't watching this morning, so I don't know how long it stood after it gapped up. Because that matters, right? If it would have gapped up, faded it right away, then it might have saved some people. But let's say we gapped up and you sort of hung around here for, I don't know, 20, 30 minutes before it flushed down. That's going to have some of these spectators thinking, okay, we got a gap up, looks like breaking out. You know what I'm saying? Anyway, so we flushed down on the first hour. And then second hour, we see that continuation. You see the lower wick. It tells us on the second hour, we did see and witness candle that looks like this. And you might wonder, you might think that, this market is completely breaking down, seeing the second hour like that. However, this is what we talked about. Did I talk about this? I'm not sure. But when the gap, and again, I've talked about this on past videos, that when the gap is deployed, like we've seen here, you see how that gap, yes, we talked about this on the last video, that I've done here. When the gap is deployed, when the gap remains open, it's going to provide a good support. So you can see there's a gap up here. Market goes up and then fade back down. And we can see that lower wick. That lower wick right there. That definitely they're buyers. Just right on cue. Right on there. Just right on that gap area.
Perfect.
See that lower wick? Right? We see that hammer candle. And then on the third hour, we see a follow through. But then we pull back a little bit on the fourth and fifth. Establishes this rising uptrend support here because as it touches the third time, 1, 2, 3, and it ramps higher on the last hour. This market refuses to break down.
Perfect.
This market just won't break down, and it is making a lot of bears extremely annoyed.
Perfect.
Because this market has been doing this for the last 5 straight months. It just won't break down. We'll see a abrupt sell-off like this right here. And there's no follow through. Basically, whatever we've seen last 3 days or this week is just bulls absorbing the selling price. That's all it's doing. That's all it's just consolidating, moving sideways. Bears are trying to shoot this down. I mean, it happened here. It happened this morning. And bulls are making sure this market is floating around and then letting the bears be tired and then you just bring it right back up. That's been the story in the last 5 months.
Not bad to be light-skinned, huh?
So now, we also have this falling resistance here. So we basically have whatever we had yesterday, bigger version. Whatever we had yesterday, we have just a bigger version of it. As you can see, it's consolidating like this now. All right? So obviously, it either needs to break out or break down. Market might want to do whatever it did yesterday, where it can break out and break down all at the same time. So if we see a gap up, and it's best if it gaps up above 520 and 520.53, which is this swing high here. But let's say tomorrow morning, it gaps up to like 520.60 right here. And if that gap holds, like it doesn't get filled, it's sustained, and there's a great chance we're going to get back to all-time high level there, right? Then we're going to see this swing high get taken out. That gap remains open. And the reason why we already got this gap that already sustained. I mean, bears came down trying to fill this gap, not successful. And because of that, bulls were able to bring it up on the last hour, right? So if we see secondary up gap, especially the fact that we have this this consolidation, symmetrical triangle patterns. If there's a pattern, if there's another up gap, and then that's sustained, that's pretty bullish. That's pretty bullish. And I could see if there's another up gap, sustained, not filled, new all-time highs. But then again, this market, let's say it trying to go up here, and then tomorrow you see like on the first hour, second or something like that, you see like this market doing this intraday. But then like it goes and down, and then it does something like this, like a shooting star, right? And it close, right? Like in the intraday, you see that upper wick, but by the first hour, second hour, that candle is again, you know, long upper wick, but small candle underneath this resistance. And then you're going to see this thing fizzling back down, coming back down to retest that support there. And then it could very well continue to get coiling here and tightened. And that consolidation could continue. Let's check out that oscillator. And well, that oscillator is consolidating as well. As you can see, the pressure is definitely a building here. This is something that we have not seen this entire year. We're seeing coiling pattern on the oscillator. This is also very rare signal. If I can remember correctly, last time we've seen something like this must have been, if some of you guys can remember, you guys remember a coiling pattern? And it's very rare that I'll talk about this. It must have been a couple years ago or something like that. It's not something that we see every single day, where you see, because oscillator is meant to oscillate the top of his band like this. Sometimes you will see the oscillator levitation either at the top of his band or at the bottom of his band. That you will see, you know, here and there. What we don't see a lot is this thing is coiling and getting tightened and start consolidating in the middle of the band. So when we see a coiling setup, the pressure in the pressure cooker, that pressure is getting built, and they need to let this steam out, either upside or downside though. That's the thing. It's such a symmetrical pattern that you see you can argue that you got lower highs, or you can argue you got higher lows. Which is it? We don't know until we see a full breakout. A lot of times what happens is when you see the coiling pattern like this, whichever it breaks out, it tends to stay there, meaning it could break out and then that also can stay at the top of his band for days as it lets it steam out, and that move can carry that momentum, that abrupt, the charge, the jump start, that letting the steam out could carry that moment either upside or downside for days, if not entire week. So this is very important that we observe what happens tomorrow here. We want to see which way we see a breakout on the oscillator. Obviously, oscillator is going to pretty much follow where the price is going to go, but keep in mind though, price is going to lead first. Price is going to lead first. And then oscillator is going to substantiate that price action. So if we start to see that oscillator breaking out to the upside, while the price is getting well above 520.53, then there's a good chance not only we get to the all-time high, there could be a good momentum to the upside. Again, the downside, bulls got some cushion here, obviously, because we're here at 519.29. So to reach the that uptrend support, the bottom of the triangle pattern, and that's we're talking about 516 or 517 or something like that here. So we still got some room here, and that gap is still open. There's no down gap though, you see? There's no down gap. So bears got really no real good weapon against the bulls if bulls decided it's gonna break out. I'm gonna come back for you. We'll reassess the situation. Enjoy evening. Good luck trading tomorrow.